Hello everyone and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. We've had a bit of a wonky market going on since the middle of June. Let me show you what I'm talking about. Right here, I've got the advanced decline line. That is the number of stocks that are advancing on a given day. That's right. Versus the number of stocks that are declining on a given day. If you've got 250, this is the S&P 500, that went up, and if you've got 250 went down, the line will move sideways. I don't think I've ever seen exactly that stat on a given trading day. Maybe 249 and 251, but I don't think I've ever seen exactly 250 and 250. Well, heck, I've only been doing this 28 years. I guess I can see it still over the next 28. Anyway, this is the advanced decline line for the S&P 500, not for the New York Stock Exchange, which is the more generally followed advanced decline line within the broad market. However, still a good idea to take a look at this and understand what's been happening underneath the surface of the market, because what happens quite often is you'll have a handful of bigger companies, bigger stocks within the S&P. Companies, well, here, like as an example, maybe like an Apple, a Google, a Microsoft, companies that are big like that, they can be doing well enough to drag the S&P 500 higher. However, the line might be going down over that same period of time. Doesn't happen all the time, but it does. And that's a clue to tell you that eventually the Apples, Googles, and Microsofts will follow the rest of the advanced decline lining situation in the stock market, which in that case was, we're talking about to the downside. Anyway, again, S&P 500, advanced decline line. See here, look, this is the trick. This sucker hit a new all-time high in the middle of August, a new all-time high. Whoa, how about that? And yet the S&P 500 was quite a bit away from its previous all-time highs that was set at the beginning of 2022. It did eclipse those highs by just a small amount. Amazing. But look down here. Here we come into the middle of June. That's the June 16th low, still the current low of this ongoing bear market. And the advanced decline line goes to a new multi-month low with price. That is to be expected. Then price rebounds, pulls back just a little bit in here. You see that? But the advanced decline line basically matches. See, it's just all kinds of wonky, wacky, odd behavior going on lately. What does that mean for us? What do we do? Well, I like to say this is a time to play a little bit of a smaller ball for a bit until you get a little more clarity. And that's okay. Because if you're making a little bit of money, if you're not losing money as everyone else is losing money, well, that means you're getting ahead, right? You're getting ahead. So that's how to play the situation right about now. And one thing I've been talking about on these YouTube videos dating back to the middle of June was the lack of bullish or positive divergences that went into the June 16th and 17th lows right over here in the stock market. One of the problems that I noted again and again and again was the lack of volume as the market had been trading higher and higher. And I said consistently to expect some kind of a retest, a return trip, a visit, if you will, back near these June lows. Now, retest, you've heard the term before, probably. Don't misconstrue it. It doesn't mean that prices have to go exactly back to where they were on the June lows of 36 on the S&P 500. No, it could be a couple of percent above, could be a couple of percent below. That's a retest. You have to have a little bit of flexibility in here. Okay, this is not just science. There is science to it, however, but it's not just science. There's also a fair amount of art that is involved. And so we've been talking for a while consistently about a possible retest. Well, the odds have now grown that a retest comes into play. There's a lot of bear on the bandwagon right now because we are in September. This is the weakest of the 12 months. However, the market is deeply oversold on a short-term basis, and so that has to be recognized as well. So how am I going to play this? Short the rallies, and again, expect some kind of a retest within a couple of percent on either side, either up or down, of those June lows, and it may not come by the end of September. This could push out a couple of months. Perhaps the election, that's only 2 months away. That could be it as well. It's possible that some of you watching this video right now have had dealings or are currently involved in doing business with some investment advisor somewhere around America. This is more for American stock investors. Foreign investors probably don't have people like this. I don't know. Maybe they do. I know Canada does, but I'm not talking, I don't know about places like Mexico or Brazil, South Korea, New Zealand, Australia, Eastern Europe, parts of Africa where we have other centurions and other people watch our videos. However, there is a popular way to deal with investing in the investment advisor universe and world, and that is what's called the 60/40 portfolio. This is derived from intense research from the late 1960s, early 1970s. Modern portfolio theory is a part of this idea, which is a believer that you cannot time the market, although I've proven for over 20 years that you can. I have done it many times. Anyway, 60% of your portfolio in stocks, 40% of your portfolio in bonds, to be adjusted in small bases depending upon your age. Now, in 2001, when the stock market was getting hit because of the technology market, the technology stocks, this 60/40 portfolio did okay because the bond market survived. Okay? Yields went down, which means bond prices went up. Stock prices went down, but the 40 side of the equation was going up in value. Similar action occurred in 2008 when a lot of the financial stocks were melting down. Bank of America and JP Morgan and Goldman Sachs, and of course Merrill Lynch and a couple of the others countrywide are no longer with us. They're either out of business or swallowed up by other operations. Lehman Brothers goes bankrupt, not even a real company anymore. So those companies were involved with a market meltdown. However, bond yields once again went up. Bond yields went down, which means bond prices went up, which blunted the impact and the effect of some of the falling stock prices. However, all that has changed this year. So far, the S&P 500 is down about 17 to 18%, and the bond market, long-term treasuries down 20%, and investment grade corporate credit down 13%. So let's call that an average loss over there. 17% for the stock market, 15, 16% for the bond market. It's very rare going back in history where you see double-digit losses in both of these asset classes in the same trading year. Very rare indeed. So your investment advisor, do you think it's time? I do. I think it's time. It's way past time. It's way past time for you to have a sit down with this investment advisor. How about that? I mean, the advisor is going to say, I know exactly what they're going to say. Stick with it. Buy and hold. Don't worry. It'll come back. It'll come back. Ask them to bust out a chart of the stock market or the bond market in 1972. You want to wait 10 years before it comes back? Yeah, I didn't think so. So a little heart-to-heart with your advisor, and it's probably time. That's right. It's time. Yep, it's time to kick that person to the curb. I mean, they're just out there playing golf, taking people to dinner anyway. That's why they love the 60/40 arrangement. It means they don't have to work. And if you lose money for a little while, that's okay. They just tell you it always comes back. Yeah, it'll come back. It just might take a lot longer than what they're willing to profess. Again, in the meantime, stocks very oversold on a short-term basis. However, intermediate, longer term, not so rosy. I'll be shorting rallies. This has been General Romulus with Ancient Roman Trading Secrets. I'm heading back to ancient Rome, and I wish you a wonderful day. That's all for now.